This is the wrap-up for the live market open for Tuesday, April 5th. We're seeing a negative mood in markets with oil falling for various reasons, and Japanese yen is the big story. Dollar yen is at the lowest levels in a year and a half. The dollar is second in line, also thanks to two Fed doves going hawkish. That's Rosengren and Evans, still seeing rate hikes, saying that markets are underestimating the pace of rate hikes. We have the Panama Papers, the Panama leaks, hitting the Icelandic government. Also, David Cameron is implied. Also, companies and banks all over Europe, all over the world. This is an ongoing story. Yesterday, figures mostly came out as expected, with the UK construction PMI giving a temporary relief to the pound. And also worth mentioning is that the RBA was not too excited about the Australian dollar strength. Despite the negative mood, the Australian dollar had an hour or two of rises because the Reserve Bank of Australia says that the rise in the value of the Australian dollar goes hand in hand with commodity prices, and in general, they're quite relaxed on the economy. Today's agenda, before we move to the charts in this wrap-up, we had a miss in German factory orders. We have services PMIs, at least one out now from Spain, coming out a bit better than expected. It's services PMI day. In the UK, services PMI comes out at 8:30. Should be a significant event for the pound. Like every month, a rise from the bottom is expected from mediocre growth to slightly better growth. Okay, to 54 points. Should be interesting. At 9, we have GMT, we have the retail sales. At 12:30, we have US and Canadian trade balance. Could be messy for dollar CAD. Both countries are in a deficit. The big event for today is the ISM Non-Manufacturing PMI, a report from the most important institution, in terms of purchasing managers indices in the United States, about the state of the biggest sector. Employment component this time is less relevant because the NFP is behind us, but new orders and the headline figure, of course, are important. Also watch out for JOLTS, job openings. It's a bit late for February, but still watched by the Fed. Kiwi, that is hit quite hard, has the milk auction and the Chinese services PMI overnight, completing the long round of services PMIs. Charts, well, now we're seeing euro dollar bounce from the lows, already 20 pips off the lows, and trying to battle this previous support line. That's where we are. And just a second. Yeah, sorry, had some confusion here. So anyway, euro dollar is relatively stable, sliding, but not the worst. 112.50 and 114.10 are lines to watch. Pound dollar sliding, 142.20 the moment. 141.75 is further support. 142.80 is resistance. Dollar yen, as I said, the big story. The low so far, 110.30. The lowest level since October 2014, when the BOJ introduced the second big round of QE. Dollar CAD with falling oil prices. The Canadian dollar is weaker. Dollar CAD is higher. Close to the highs of the day. Next resistance, 131.70, followed by 132.20. Support at 130.80 and 130. Aussie dollar, well, already erased all the RBA gains and reaching the lows of the day at 75.60 at the moment. 75.30 is some support. It's become a bit choppy. Kiwi dollar, also one of the bigger losers after it was one of the stronger currencies and gained a lot of ground. It's 67.75 at the moment. Support at 67, resistance 68.20. The loss of this level was followed by an attempt to break above it, but it didn't work out, so the Kiwi has better technical behavior. All in all, commodity currencies are suffering. The yen is stronger, clear risk-off mood, more mellow, moderate moves in the pound and the euro. Mood is negative. Let me just look at oil prices. Remember, bad mood and lower oil prices go hand in hand together. WTI broke under 36, and here we are. 35 is the next level. Okay, So that's it for the wrap-up for today. As I said, the markets are certainly on the move, and negatively means a stronger yen and yeah, weakness for all the rest, more or less. Let's see what the ISM Non-Manufacturing PMI brings us. Anyway, so that's it for today. Thank you very much, everybody, for coming. Wish everybody a safe and successful day in markets, and we'll be here tomorrow. So until tomorrow, that's it. Thank you, and bye-bye.